Welcome back, folks. Dow up 800, NASDAQ up 282, S&P's up 91. Let's go to our man, Mr. Basil Chapman, as we do each and every Wednesday at 20 past the hour. And don't forget, folks, Basil does an outstanding show here every trading day, 12 to 1 Eastern Standard Time. Also has a great newsletter, The Opening Call. The way you get the opening call, come over to our website at TFNN, go into newsletters. You're going to see the opening call right on the right-hand side, right top corner. Hit view, and then you're going to hit subscribe. You can get the opening call for 1 month for $128. You can get it for 6 months for $595, which is a savings of $173 or 22%. You can get it for a year for $995, which is a savings of over $500,000 or $541, a savings of 35%, and you can ride that wave each and every day. They all come with a 30-day money-back guarantee, folks. Talking about riding that wave, Basil, when I first started just introducing you, the futures were up 89 and we're up 101.
I saw that. So this is really a very interesting 2 days, because you covered a whole bunch of things very accurately in terms of what I'm looking at. So let me go through what I was saying yesterday and what I was saying today on my show, noontime. Eastern time, that's the Tiger Technicians Hour, and of course my daily newsletter is the opening call. So what I had said is, I've been watching all the conditions going into Sunday evening, Monday morning, were what I would look for if there had been a sustained move of many months or weeks, even many weeks, going to a low, because you would have washed out all the shorts. So the speed with which became 20% off the high that was made just for a few weeks ago in the Dow and the S&P and the NASDAQ, IWM, this is unusual to say the least.
Yes.
Because the conditions are really very unusual. So what I had said is, for the subscribers to my opening call, we've been attempting to go long the last 2 days. And we got stopped out with very tight stops in the QQQ, the Index 100 trading vehicle, and in the Dow. But this afternoon, just as I was about to do my show, the Tiger Technicians Hour at noon, I just said, nope, now we're going to go fully long. And we bought the Dow on that little dip afternoon.
Oh, you hit it right. Nice. Yeah.
At about 24,100. And today was a low. We don't know if it's the low, but it's a low of some sort.
Yes.
And what I said to subscribers is, let me just go through this one at a time. You've touched on it, but I'll do it in my own technical analysis.
Good, yeah.
So what I had said is that if you had been looking, and I showed this chart to subscribers, well, I showed it actually for the last couple of days. I've been showing it on my show. The VIX index went to 62.12. So this is the coronavirus. It isn't just that. I'm calling it that because yesterday we also had the oil smashed to the downside. But this is the CBOE volatility index. It's really a measure of fear. Now, people like to say fear and greed. I always look at it more as fear. The greed, I mean, when you're down in the 11s, you're not really talking about greed. That's more just benign, you're kind of sanguine, things are okay.
It's definitely fear, right.
But it's fear is absolutely, that is an emotional response. And I want to talk about this because it's an emotional response in the volatility index. It went to 62.12. And I said on my show today, I said, if the Dow starts to move higher later in the day, this time is different, because if it moves higher and it can get to about 580 plus 580, maybe, 480, 520, and the volatility index goes underneath 50, for me, I'm having signs that says there's a good chance that the volatility index could start to move lower. That's number one. Number two is the TLT, which is bonds. I mean, neither of us have ever seen a screamer like this. Look at that the monthly chart starts off. And what is the month? We're now on the 10th day. This is not 10 trading days. This is just the 10th day of the month. The month starts off in March with a low of 152.36 and goes all the way to 179.70. I mean, that entire move of the month, well, so far it's just about 8 trading days, is more than you could get if you go back a year or so in the whole move up until the end of last month. So what I've said is, if the TLT, which at the time was trading at about I think it was at 160, it was about 168 or 169. I said, if that starts to slide and we can see a decline, oh, no, that's right, it was just over 170. I said, if we could see a decline underneath 168, 167, that'll be really good if it's corresponding to the opposite move of the market moving higher. And now we see it's down at 163. So it's down 8 points, minus 4.81%. I mean, that's a big move down, but look at the move it's had on the way up. And it's a peak E. The VIX index was a peak F in the Chapman Wave methodology. The other thing I'd say is if gold starts to slide, because that's kind of a confirmation for me that money's coming out of that, I do treat more as a fear gauge, like the volatility index, but it's more an international look at kind of buying gold because other things are looking bad, especially if the financials, which would be in this case the XLF. Look, the XLF is, oops, there it is trying to come off the low. It's really been smashed, going to the 22s after being in the 31s just recently. Actually, it double topped in the 31s as it was trying desperately to hold. So that, I mean, 10 points, and that's a 30% decline. So it's trying to rally. So I think that says that gold doesn't have to go away or anything like that, but it's not quite the trade right now. I think there are other reasons why people might want to be looking at gold. So I'm treating that a little bit separately. And one of the key things is my dollar, Basil's dollar. We've been talking about this since April of 2018, where subscribers went long at 90.07. We've held it all this time, taking just a little bit off on the way. It hit 99.91. 100 par was really the target that I had for a long time. Had a severe correction from 99.91 on the 20th of February. That was peak F in the daily. It was a peak E in the weekly, and it got really smashed into 94.65. So this move, especially this earlier in the day, it was only up about 48. Now it's $1.45 up. I think that's important because I treat the dollar kind of as American icon for like Harley Davidson. It's internationally people talk about the dollar, and that's really what I think. And I suspect the dollar is still going to be in play for quite a while as long as the overall economy comes back quite strong. I think you'll see the dollar rally. But in the meantime, I should have a nice bounce towards the 97, or I'd say maybe 96.80s to 97.30s. If it can go higher than that, that'll be very good. But this is very important for me for the whole panoply of all the different things I'm looking at to see if this could be not just a little modest bounce, but a low that we're making in the general market that has some sustainability, at least for maybe a week or two, even a couple of weeks. I'm not sure because we're going to have to see how we follow through tomorrow. You can be sure that the administration is going to be doing something to try to boost the market. So I think we've made some kind of a low, and I think that's also very important. We're fortunate in being able to have the clients of the subscribers of my opening call out of all their stocks for quite some time. Now we're getting back in a small way.
And folks, really easy to get Basil's newsletter, the opening call. Come over to our website at TFNN. You go into newsletters, you're going to see the opening call right there. Get it for a month, 6 months, a year, all with a 30-day money-back guarantee. Basil, you have a great one, safe one, and we look forward to the show tomorrow.
Thank you, Tom. You too.
Thank you. Stay right there, folks. Come right back.